Welcome back to another episode of Gimme Some Truth. We are exactly 13 days into the new year as of the recording of this. And on our minds is the market outlook that is about to come out to the public.
Yeah, exactly. I mean, the first thing that's on my mind is I'm actually going to stop kind of listening to our marketing team a little bit, Matt.
Okay.
That's the resolution for 2026 because they always want to keep us on topic. But I think we really should address the elephant in the room, which is the year has gotten off to quite a bad start because the Green Bay Packers lost their playoff game. And quite a crushing loss that was to the Bears. I mean, fortunately, I would say one thing about our office. We're mostly all Packer fans, but the only other two guys in our office that like other teams, Andrew, Vikings fan. I mean, they don't even have a legitimate quarterback, and their team's awful. And then the Lions didn't even make the playoffs, and Mitch is a big Lions fan. So we get a little solace in there. Unfortunately, Aaron Rodgers' career is probably over with, and we probably saw his last game last night too. So a lot of change.
I don't know that we can definitively say that we know where everybody sits from a rooting standpoint within the office, can we? Do we know where everybody's at? I don't know that we know where everybody's at.
I mean, I think so.
Yeah.
And if they're not a Packer fan, they're awfully quiet about not being a Packer fan.
Do a little office poll and see where everybody's at.
I don't think we have any Bears fans.
Can report back with the findings.
Exactly.
Market outlook. Market outlook is something that we produce as a kind of our thoughts in terms of just what we think is the topics that people want to hear about in kind of a consolidated piece, right? A single piece, but we write it, we produce it, we create it all in-house.
Yeah, exactly. It's a big lift. We started working on this. I think we started talking about it in June, getting the theme and the topics and loose topics, because obviously then we have current events that happen during the year where we have to pivot where we're going to write or how we're going to write or the statistics that we use in the piece. But we've written it for a number of years now. I think this is probably our best guide yet. It takes an incredible amount of time, effort. We wrote in teams this year, a little bit different. Yep. And this year, I mean, I love our theme. I think that we've hit the nail on the head this year on the theme. We chose music as a theme. Right. And we did a little play on the now what I call markets is the name of the piece. And so it's that now music that everyone's probably seen with the CD jewel case.
Yeah, we tried to pick different albums and then kind of work a topic off of an album. The vast majority of us in the office are all huge music fans. And so the idea of picking iconic albums and then kind of working our topics into those albums. I think really what it comes down to is just trying to make it as enjoyable as possible to read a 50-page document. And so we understand that finance is not always super exciting. And so this is our way of trying to make it enjoyable for people, but yet at the same time, serious about our topics and our thoughts in terms of what's going on in the world. Yeah, exactly.
If you look at some of the major things that have been produced out there, like JP Morgan does a great guide to the markets, but that's just like chart after chart after chart.
Right.
And you gotta have to make your own narrative there. And, we try to distill it down so that it's readable. It's a little bit fun. We have some call outs in the articles. You obviously were the big driver on the album that you selected, considering that you picked an Alanis Morissette album. I know you're a huge fan.
Alicia had nothing to do with that choice. Nothing to do with that choice.
What is your favorite Alanis Morissette song? Do you have one?
I mean, it would have to be on that album of Jagged Little Pill. Maybe Ironic, but no, probably not. You Ought to Know. Maybe You Ought to Know, probably.
I figured you were a You Ought to Know.
Yeah,
guy.
Probably.
I'm more of an Ironic guy, but okay.
If you had to distill down the market outlook to three topics, what were the three main things that we talked about in the guide?
I mean, I would say it was really diversification is a big piece of that.
Right.
And we talk about diversification a lot. I mean, that's not a new topic, but I think it's particularly super important to focus on now.
Okay.
Particularly because, the second thing that I'll say is concentration. So diversification and concentration. So the concentration risk overall that we're seeing in this market is pretty extreme. The Mag 7 make up so much a part of the large cap indexes now for the U.S. that it's a bit concerning. We have some topics to deal with there. And third is kind of taxation, I would say. talking a bit about how the One Big Beautiful Bill Act works into things, how it may impact how we choose investments, how it may work into how we're going to plan out our distribution strategies, things like that. So I would say those three topics overall, and it's a great guide. I mean, you should take the time to read it. You can go to different hyperlinks, articles, things like that. And I think maybe a fourth thing that I would say would be uncertainty. I think all of us are writing and we're not sure what's going to go on, and that there's always uncertainty in the markets, but I think there's a bit more uncertainty now than we've seen in the past. Will this rally persist, or will this go backwards? And so we're actually writing a little bit about recession, and you and Alicia had an interesting topic in there too about writing about the past.
Yeah, we tried to unpack the idea of how does recession fit within what's known as the business cycle, which is simply just the idea of, the economy, grows, peaks, starts to fall, hits a bottom, and then repeats, right? And so then kind of where does recession fit within that, and kind of contextually understanding kind of how it works within the economy in general. I thought another big theme was AI. I think AI kind of found its way into maybe every article, or at least was mentioned, and I think that we're excited, but we're also not sure where this all goes.
Exactly.
That's a pretty fair way of looking at it. And also realizing that within these kind of almost groundbreaking things that happen over decades within our society, whether it be the advent of the personal computer or the creation of the internet, there's a lot of noise and just unsettled kind of figuring out in the beginning, and it kind of feels like that's where we're at right now with AI. 100%. And some of these companies will not be around in 5 or 10 years, which is really hard for us to get our head around. But I think that's inevitable that some of these companies simply won't be around.
Yeah, there are definitely some comparisons in the market outlook to, are we in this 1999? I wrote an article about that. Are we in this 1999 sort of situation? Is this a huge bubble? Is this the dot-coms all over again? And I think the answer to that is probably no, but it'll rhyme a little bit. We're going to have our pets.com that will happen on the AI side, where a giant company that everyone thinks is too big to fail will fail. Right. And all of a sudden it just deflates and the story can change. And the AI narrative can change significantly too, with just technological changes that happen, or something that gets discovered that we didn't know about. If all of a sudden these chips become... we have chips that are developed that take a lot less energy, that can have a huge impact on whether or not we have to build all these data centers or all this infrastructure around energy. So there's all these different things that are out there that are maybe concerning for some people, right, maybe exciting, maybe a little bit of everything, right? So it's a really fascinating time. I don't know whether we're in just the best time ever to be an investor of our lives, or if this is all just kind of a facade and we're going to see it melt away and then we're going to see a big correction. So 2026 is a really interesting year to kind of come into and see where we're at. I think we're going to see large growth rates for the GDP. I think we're going to see big GDP prints, but will we see big inflation? Will we see the AI narrative unwind? Are we going to see huge geopolitical tension? There's all kinds of different things that are going to go on this year. Yeah,
or does it potentially get hit with something that kind of almost nobody sees, like it was in 08, 09 when the mortgage market is what kind of led to the unraveling of it. And so things like that can happen, where we just have these events that happen where all of a sudden we look and go, wow, that was not what I expected was going to potentially set the rock rolling down the hill.
Yeah, but everybody knew that before it happened. That's right. What they write
That's
now.
Right. That's correct. Yeah. Predicted by, 10 of 8 economists.
Yeah.
So.
Yeah. Then that was one of the funny things, is that I just remember back then, and I remember the tech bust too. The tech, boom was never going to end. And there was nothing that was going to stop it.
Right.
And then the same thing with this 2007, 2008. Everybody knew about the mortgages were going to all come to roost, except for no one knew. That's what made it so big.
Right.
So you're right. If something happens, if there's a big narrative change that we didn't even see coming, that will have the biggest impact in the market, in my view. It wouldn't be like, okay, maybe AI isn't quite panning out what we want it. Well, that'll be a little deflation. But if you're talking about a sharp correction or a sharp down market, it'll be something that's totally unforeseen that happens.
Yeah, and that's why I think the bubble conversation sometimes gets a little overplayed, because is it a bubble? Is it not a bubble? In a way, you kind of go, who cares if it is or isn't? That doesn't really matter from the standpoint of if the market falls, which is really what people are saying with bubble. What they're saying with the bubble is the market on the precipice of falling 20 or 30 or 40%? First of all, that has happened many times in history when there was no bubble, right? I mean, that's a natural course of what happens in the market. So it's not a matter of defining whether something's a bubble or not. What people are saying when they ask that question, almost rhetorically, is, are we about to fall into the next recession? I think is really what people are asking when they say that question. And the answer is we don't know. If you would have asked both of us 3 years ago, we would have said we would already have felt some level of pullback, and yet here we are, right? Mm-hmm. So to say that it's going to happen in the next 2 or 3 years, I think is just a dart at a dartboard, right? We just have no idea. So just because the argument is that the market is potentially a little overvalued right now, doesn't mean that it cannot continue to go up, or said in a weird way, that it can't continue to even become more overvalued, right? Well, if it does, then that's another year of up markets. And so we shouldn't get out of the way of that necessarily. We should just understand the fact that we know where we're at from where we were, right? To think that that's going to help us to understand where we're going, I think that's a leap that people shouldn't make, right? We should just simply look at it and go, here's what we think for the next 12 months. Let's get positioned that way. And again, that's why we talked about diversification and concentration risk so much, because if you haven't looked at your portfolio recently, you could easily be very large cap heavy or very tech heavy and not even realize it.
That's exactly right. 100% right about that. Almost no matter what, you'll have a bunch of tech exposure in your portfolio, which, I don't think is bad, but you need to understand what that means. And I would challenge everybody to go look at your overall report, your top line, whatever that top line is. You got $1 million, you got $2 million, your top line is sitting there. Subtract 30% from that, and then go, what would you do? Mm-hmm. What would you do? If you're not gonna do anything, okay, well then you might be positioned fine. We still want to check on concentration. We want to still on anything. But if losing 30% causes you to panic, or you'd be like, I can't sleep at night if I lose that amount, then you need to reposition yourself. And what a better time to do that than when it's sunny outside, than when it's raining. So you can't do it in the middle of when everything is all going to crap, because that's the worst time to make decisions. You're going to be emotional. You do that. Right now, we're at all-time highs in the market. Take a look at your portfolio. Make sure that you're making wise decisions. Set yourself up for the next down market. That's kind of some of the stuff we write on too. I think that's one of the points of your article is, hey, we got a situation where the next recession, it's going to hammer portfolios, it's going to do this. You got to be prepared for all of that. And if you're not prepared, get prepared in 2026.
Yeah, I think it's really a difficult challenge right now because, we've had I'll call it one meaningful downturn, or bad year, if you will, double-digit down year in the last 17 years. It's been a long, long time since people have seen a big body blow to their portfolio. And so I think what we're calling out here, we're not calling for the sky to fall. We're not saying, panic. What we're saying is just understand it's been a long time since we've had a meaningful downturn. And so the next one is going to happen whenever it happens. As always, we manage through down markets, not around down markets. And so to Clint's point, which is exactly right, understand where you're at right now from a risk standpoint. This is a great year. 2026 is a great year to take a good assessment of where your portfolio is at and really have those kind of more complex conversations in terms of what if this, what if that. And if those situations concern you, then we should be making these changes in the next 12 months, not in the middle of the ugliness. So,
exactly.
The market outlook is coming out in days. No.
Yes.
Do we
it'll be out by the time this podcast is released.
Wow.
Let's put it that way.
Wow, that's putting some pressure on the people that get this thing over the finish line. But I guess that's okay.
They're ready for it.
They're ready for it. Thanks so much for tuning in. We hope you really enjoy the market outlook, and we really do want your feedback. If you read 3 pages of it, if you read it from cover to cover, whatever your feedback is, whatever your thoughts are, we'd love to hear those because that's what makes it even better, the next time we try it. And if you want to hear a topic that gets discussed either in a podcast or written about, please let us know because we'd love to hear that feedback as well. Thanks so much for your time, and we'll see you next time on Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.